I think it's as expected, and I guess I'm not a little surprised that we are selling on the news.
You're not a little surprised, meaning that there was just a lot of hawkishness in terms of expectations that have been built up ahead of time?
Yeah, and I think it probably adds to the clouds over 2019, because this year markets have been narrow and fund managers almost have record underperformance. 77% of managers are missing their benchmark. So I think between now and year end, it really has no effect, but I think as people think about the path of rates next year and
are
trade
we
tensions.
Get 2, 3, 4, 5 rate hikes?
Yeah, that's right. And
you think the market is has lower expectations than the reality is going to be next year?
That's right, or even uncertain expectations. So, but in the meantime, the economy's great, and I know you guys had a discussion. I completely agree that CEO confidence is really strong. I think that's the most important thing to focus on because businesses have very few regulatory constraints, and so I think profit growth is going to be strong not only the rest of this year, but pretty decent next year.
Is that also based on what you think capital expenditures will be next year from these companies?
Yes, there's pent-up demand because, as one way to think of it is that depreciation has been higher than capital expenditures for many of the years since 2009. So we know there's pent-up demand for businesses to expand. And of course, with oil sort of acting better, and oil is really an important sort of stimulus for capital spending, it's a decent CapEx outlook as well.
Brian, let's talk about the bond market's reaction, because that was also a little strange. Watching what happened to yields. They'd been pushing up towards 3.1%. That finally seemed like we were on a move to kind of get there. And then yields coming under a little pressure yesterday, even though the chairman said that, look, he's going to do what the data tells him to do.
Yeah, I think what you're seeing in the bond market with the yield curve flattening a little bit on the announcement in the press conference was, why? Why is the Fed need to continue to raise rates this fast, especially in a benign inflation environment? You look at their growth expectations, they start to fall off a little bit after this year into next year. And in that type of environment, if the Fed's going to keep raising rates, the likelihood of inflation showing up very, very low. So that's going to push long-term rates lower.